Hi friends, we are starting a face-to-face offline batch in Bangalore with SS Academy. That is for CA Final Financial Reporting paper number 1. Yeah, we'll be taking exactly 2 months from 1st November to 31st December. We'll complete it. It is starting from 1st November 2022. Yes, and in Jayanagara branch of SS Academy, we have morning batch and evening batch will be at Seshadripuram SS Academy. Right, and if the student is missing because of any reasons, right, they are going to get a backup class. All right, we'll ensure that their things, they will study and complete. And from the face-to-face batch, you know the benefits out of it. We'll be completing the syllabus in time. You don't need to postpone and you don't need to compromise for your goals. See you in the class. Please share this information with your friends. That will help me and as well. Thank you. Next, for my books, that is an Ind AS made easy, our financial reporting made easy, and fast track summary book. Yes, you can order in ravikanthmiriyala.com, or you can contact the given number for the books. Right, for your doubts, clarification, please join the Telegram group Ind AS discussion group RKM. These charts are from quick revision fast track chart book of mine, and which is available in my website, that is ravikanthmiriyala.com. Let's look at Ind AS 40 investment property. What is investment property? Investment property is land or building, land and building, that is both, I mean to say, are part of building. Yeah, which is held by us as a legal owner, or which where I am a lessee, where we are holding it as an ROUA. Yeah, and what is the purpose? The purpose of it may be for the rental purpose or capital appreciation or for both the purposes. Yeah, then it can be investment property. Yeah, there are some few examples which I have given. If it is a land where the purpose is not determined, then you can say it is an investment property. Remember, it is land where the purpose is undetermined, then it is investment property. If it is owned by the company, if it is owned and used by the company, then it is a PPE. It is held in the process of, it is held for the sale in the ordinary course of business, then it is going to be obviously inventory as per Ind AS 2. And if it is building under construction, then you have to ask the management what is the purpose of this construction. Yeah, if they say it is for rental or capital appreciation, then obviously investment property, and according to their intention of usage, you are supposed to classify. Suppose there is a building, quarters, something like that, which is given to the employees, maybe for the no rent or maybe for the minimum rent, then it will be treated as PPE. Okay. And if there is a property which is held for rental purpose and capital appreciation, and partly it is being used, okay, so that means within one building, all the things are happening. Some part is rented out, some part is used by the entity. Then you have to ask one question: can the rented part be sold independently? If you say yes, it can be sold independently, then it is investment property. If you say no, it cannot be sold independently, then entire building will be treated as PPE as per Ind AS 16. Right. If the company is providing some services to the customers or something like a hotel building, right, even when the owner is providing some services, then one has to look at what is the significance of the services. If you say, sir, insignificant services like security, maintenance, such kind of thing, then it is investment property. No, we are providing a big service, significant services are providing, like in case of hotel. The customer is paying rent. It is not rent only for the space, he is paying rent for many other services which the hotel provides. Under that circumstance, it is going to be treated, the hotel building will be treated as PPE, that is Ind AS 16 will be applicable. Okay, when it comes to recognition and measurement, yeah, you can buy it, by paying cash or credit, or you can do self construction of the property, or it can be a barter system. Yeah, if it is cash or credit, that is normal. Normal in the sense like exactly same as Ind AS 16. You can say all the cost of construction, correct me, including the borrowing cost, all other costs directly attributable to the construction or acquisition of the asset. If it is getting constructed by the entity, then all the overheads which are directly attributable to the construction of the building should be considered. Yeah, if it is a deferred credit, I mean same thing, it's like you should recognize it at a cash price, correct? And the difference between the total amount and the cash price will be considered as interest element, and that will be transferred to profit and loss. And if it is a part of barter, that is exchange of assets, under that circumstance, I mean it's the same thing, what we discussed under Ind AS 16, same thing will be followed, that is the fair value model or the book value model which we discussed. And normal things, I mean which the cost does not include. Yeah, that means initial recognition basically will be recognized at cost, right? And cost does not include what? It does not include, it does not include the startup cost, initial operating losses, and abnormal wastage. Abnormal wastage will never be capitalized under any circumstance, whether it may be intangible asset, whether it may be tangible asset, whether it may be investment property, or it may be agriculture asset, or it may be inventory. Obviously it can never be added to any asset, it is supposed to be charged to profit and loss. And subsequent measurement, when it comes to subsequent measurement, yeah, if it is held for sale, then obviously you have to refer 105. If you are holding it as a lessee, correct? I mean I told you already, investment property can be held by us as a legal owner, or it can be a part of I mean as a lessee, as an ROUA I may be holding. If it is as part of ROUA, then follow Ind AS 116, that's it. Then no, under any other circumstance you have only one choice, that is cost model. You do not have a revaluation model, there is no revaluation option. I mean that is actually, as per IAS, we call it as a fair value model. Yeah, there is no fair value option given by Ind AS. This is a carve out, this is a carve out, right? But the fair value of the investment property has to be disclosed. The fair value of the investment property has to be disclosed every year. There is no exemption to it unless until you cannot calculate the fair value at all. Okay, right? If you say, if you can prove it that I cannot calculate, there is no comparable asset in that area, then that is exempted. But in the future, whenever you are able to measure it, the fair value, then you have to measure it and you are supposed to disclose it. This fair value measurement is only for the purpose of disclosure. There is no accounting to be done, right? And the last topic, which is reclassification. Yeah, reclassification, from where to where it can happen. Investment property can be turned as PPE, investment property can be turned as inventory, and opposite way, a PPE can be turned as investment property, or inventory can be termed as investment property. Yeah, see, under all these circumstances, no, there should be, I mean there should be an evidence. I mean you should prove that really it is happening. Okay, I mean if you prove it, I mean say I was using this, it was a PPE, now I have vacated and I'm looking for a customer, correct? Now I'm looking for a tenant, then I can say this is investment property. Okay, or I am into real estate business, I was using this, I was using it, I mean it may be an investment property. Now as part of my business I wanted to sell it off, now it is going to be in inventory, right? Under any reclassification it will be happening at book value, since it is taking place at book value. Okay, since it is taking place at book value, there will not be any gain, any loss. But remember, it is not just because of the intention changing, it is, you have to prove it with the evidence, right? And disposal is normal. When you sell it off, whatever the gain or loss, that will be always transferred to profit and loss. Nothing will go to capital reserve or revaluation reserve, nothing, no other reserve. It has to hit profit and loss. And how do you calculate gain or loss? Normal, that is sale proceeds as per 115, that is transaction price as per 115 minus carrying amount, that will be the thing. If you like this video, please share it with your friends. Let this be helpful to as many students as possible. And thank you. Wish you the very best.